Hello and welcome to my video. This video is all about property, the financial and the tax implications of becoming a landlord. And this is almost virus free, so I'm thinking about what we do after the close downs are finished and once we get back to normal. I'll be doing other videos like this, so if you want to see more content then please consider subscribing to this channel, and as always it really helps me if you press that like button. Investing in property. A lot of people like to invest in property, and I think that the key driver is that we can all see that the financial markets are up and down, and few people really understand them. Whereas with a property, you can actually touch and feel it, it's real, you can know your tenants, and the whole thing feels more secure. And I know that, and also actually, the returns have been amazing over the last years, but of course that doesn't mean they will be in the future. But there's a number of things that you need to consider in terms of financial and administrative matters and tax matters. And then there is also what sort of property you want to have. So personally, there's a choice between commercial and residential or a mix. Personally, I have both of those. Commercial because the yields are higher, and actually a lot of risks actually go onto the tenant. So you can have a full repairing lease, which means the tenant is responsible for repairing the property, whereas you never get that in a domestic situation. The problem with commercial is that although the yields are higher, it's a very illiquid market, so there's much fewer properties buying and selling, and also you can get bigger voids, because with a commercial property you might have many months between lets, whereas there's such a strong market for people having houses to live in. And then there's also, of course, a choice between short-term lets and longer-term lets where people just live there. And I know that a number of people have been making money out of short-term lets. I guess the problem with that is that short-term lets are a lot more hassle, a lot more administration. So if you don't want to keep your administrative burden down, you definitely don't want to do short-term lets. But I know that a lot of people have made money out of it, so there is that choice. So with further ado, let's get on to the important thing, which is the tax and the finance. And I think the first choice that you need to make is between a limited company and holding a property personally. This has become particularly pertinent now that you don't get high rate tax relief on interest, and that's really changed the dynamics of that. And the main things to consider, so personal, it's just easy. So there's the simplicity. If you're a basic rate taxpayer particularly, why would you complicate your life? And if you've only got one or two properties, why would you complicate your life by having a limited company if the saving is really quite small? But you want a limited company. If you want to end up with a number of properties, 5, 6, 7 properties, 10 properties, then I would suggest that you really look at having a limited company, because the administrative burden is the same no matter how many properties you have. So therefore it gets diluted if you have a substantial portfolio. And if you're a high rate taxpayer, you are going to really get taxed a lot with the disallowed interest. And in addition to that, putting an existing portfolio into a limited company is really much more difficult than setting up in the right way in the first place. So for that reason, let's look at limited companies. So why are they good? So if you're a high rate taxpayer, you get your full interest tax relief. More properties, you get dilution. Particularly if you're holding the properties for longer, because the whole limited company structure, there's a difference in capital gains tax, which may or may not have changed by the time you sell your properties, but there is a difference in capital gains tax, which is generally better if you hold the properties personally. You can share part of the shares. You can have your children as shareholders, particularly if you've got young adult children, so that they could get some dividends, say while they're at university, and that can help split the tax burden amongst the family, and also has inheritance tax issues. It's a little bit complicated, but it is a thought. But it is more complex. And then sitting in the middle of that, I've got the bank. because they are relevant. Because if you want to borrow the money to buy the houses, then the bank's really important. And sometimes they charge more interest if you're a limited company. Sometimes they don't. I can't control the banks. And no doubt when we get out of this, the banks have a different attitude to risk to what they have now. However, the making sure that you can get your loan and having a good relationship with a mortgage broker is an important part of all of this. So then let's look at some of the other tax implications. So you've got pre-letting expenses. Sometimes people forget about pre-letting expenses. So if you buy a rundown property, do it up and then let it, those costs of doing it up initially are not tax allowable. They're pre-letting expenses. And people don't often remember that. And the reason that it is like that, if you could buy a completely finished perfect house, or you could buy a rundown one and then do it up, and it puts those two situations in the same, so they're treated the same way, and so it is fair. But a lot of times people buy a property and then spend a lot of money on it, expect not to pay tax, and don't quite get what they expect. So that's needs to be remembered. But then generally, in terms of property, the overall rule, like everything else for tax, is wholly and exclusively. So if something is wholly and exclusively for your property business, then it's an allowable expense. So getting an accountant to do property accounts would be an allowable expense, as would letting fees, maybe some mileage to look after your properties. And then we get on to what is capital and what is not capital, which is normally the big issue. So capital expenses. So what is allowable in terms of, and what just goes on, is added to the purchase price for capital gains. So which is which? And really it's about replacement as opposed to improvement. So if you improve something, it's capital and you can't claim it in that year against your tax. But if it's a replacement, so then it is allowable. And there is quite a lot of case law, and it's all down in the detail. But normally, that as long as you replace it, if you replace it, so sometimes things are inherently improved because because modern materials are different to old-fashioned materials. So as long as you do something that's equivalent, modern equivalent, then replacing things is allowable, whereas an improvement is not. And then we've had a big reminder, this is almost virus-free, but this is the non-virus-free part of the video. What we've got to remember is to get our paperwork done. So it's important to have things in the right name, in the right way. And a lot of people have had a really sharp reminder on this because there's been £10,000 grants to people who've got small businesses. But in order to get those grants, you've had to have your property in the right name. You've had to have it registered for small business relief. You've had to have had all these things in the right way, and you know, if you suddenly realise that your paperwork wasn't done, then maybe you haven't got the reliefs and the money from the government that you might have expected. So always keeping in front of you, keep it on top of your paperwork and making sure that it's just as it should be. I think we've had a bit of a reminder that it is important because governments love paperwork and they love things to be just so. So that's property, an overall view of property taxes and the administration for properties. If you like this video, please do press the like button because that really helps me. And if you have enjoyed and you want to see more content like this, then please subscribe, and we'll see you on the next video. Thank you.